Welcome back. Neeraj Seth is CIO and head of APAC Fundamental Fixed Income at BlackRock. He's joining us now. Neeraj, great to have you with us here on the program. Good to see you. Prashant this side. We're talking to you, I think, in the absolutely the right week, right? Lots of central bank decisions with potential, and many of them live in that sense. Which is the most important cue to your mind? Let's start with the Bank of Japan in that sense. Any expectations, Neeraj?
Sure. So I think all central bank meetings are critical. I would say, in fact, FOMC is the core, but certainly Bank of Japan is live, and two key expectations there. The first, obviously, in terms of the shift in the bond buying program or the quantitative easing that they have been running for a long time. So do expect to see a shift there in the bond buying program. And there is a possibility that you do get a rate hike, although I would argue that that's still a 50-50 in terms of BOJ moving with regards to policy normalization here. And market is somewhat divided on that. So certainly it's a live meeting. The inflation data is supportive, but Bank of Japan, as we have seen over the last 12 months, has been very, very gradual in terms of their monetary policy normalization. So I think you can actually call it a done deal for BOJ to hike rates.
Okay,
for the Fed, Neeraj, as you said, that's a crucial meet. Do you think they will give a clear indication that conditions are now falling in place to start cutting rates?
I would put a reasonable chance that the Fed actually paves the path for transitioning towards the easing cycle starting as early as September. Now, to some extent, it always comes down to, obviously, the level of agreement within the FOMC and specifically the voting members in terms of where they get to. But the key here is I do expect the Fed to have a more balanced tone, first of all, in terms of the dual objective of price stability and unemployment or full employment. So I do think the labor market will come back in focus, which has been the case in the last couple of meetings, and a reasonable chance that they actually do open the door, given what we have seen on the inflation data, which is 2.6 on the core PCE, 3% on the CPI, 3.3 on the core CPI, which has been drifting lower, and the unemployment, which has not touched 4.1 and slightly, in fact, inching higher. So all in all, I think the balance is shifting towards the normalization or the easing cycle to begin in September. So I do expect to see an indication from the Fed while keeping the policy rates unchanged this week.
Okay, so you're saying that the policy rates will remain unchanged this week, but there could be an indication of the easing of the rate cutting cycle from the September policy. What does all of this mean for a market like India?
So the key here is broadly, let's start with what it means for the rest of the world. Obviously, if you think about the emerging markets, most of the countries have been in somewhat of a bind to not start cutting rates ahead of Fed. Now, specifically for India, I do in fact think that RBI is less constrained by the Fed, but the Fed starting on the easing cycle does open the window for RBI to look more at the domestic conditions and not get constrained by the global DM policy. I don't expect RBI to cut in the near term. It still might be a few months away, but it certainly eases up the window for RBI to look at the other side in terms of the easing cycle. So all in all, I think it actually starts creating room for the RBI to look at the easing, as I said.
Okay. Hi, Neeraj. Good morning. Nigel on this side, and good to see you in. Well, the big event that passed us in the week gone by was the budget 2024. And there was some angst with regard to, taxation on capital gains going up, particularly on equities. How did you read it? And what about the fiscal prudence that the FM stuck to?
Sure. So first of all, I do believe overall it was a good budget. And it did strike a balance between inclusive growth, infrastructure build, and the fiscal prudence and the path of fiscal consolidation. Now, there's no perfect budget. There always will be some parts where something got to give. And the increase in the long-term capital gains tax was somewhat negative, but I don't think from a long-term perspective it changes the India story or the attractiveness of Indian risk assets. So I was not too worried about it, but you could always see an immediate knee-jerk reaction from the market. But broadly, I do believe the budget was actually good.
I mean, it was actually exactly just a knee-jerk reaction. It was exactly that, Neeraj, as I think we all saw, right? It didn't even last maybe an hour, 2 hours or so, and the market moved right back up. A great conversation, Neeraj. Hope to see you more often here on the channel. Thank you very much for joining us this morning for a quick sort of snapshot view on the most important things.